So this is a trader with a almost 74% win rate, and he is profitable. And he asked us to take a look at his data and help him analyze his trading journal. That's what we're gonna do, and the findings are absolutely incredible and super interesting. So the first thing, when I look through the home tab, I just take a look at the broad data points usually. And the first thing that really stood out is here the average P&L. You can see that the R multiple, or reward to risk ratio, 0.26 is really small. And when we look at the average winner and the average loss, you can see his average win is 30 bucks and his average loss is minus 120. So he is making money, clearly. His win rate is really good. But the reward to risk ratio is something that stands out to me. And typically, of course, you do expect with a high win rate a lower reward to risk ratio. But the thing that I ask myself then is, first of all, what are the implications of a low reward to risk ratio system? How will this impact his drawdowns, his swings, and are there ways how we can boost this without damaging other areas and other metrics of the system? So the first thing I ask myself with a low win rate is, why is it so small? Is it by design, or is he somehow managing his trades and maybe starting with a high reward to risk ratio but then getting out of the trades? So the first thing where you can really nicely see this is trade analytics. And what I did is I added here the outcome. So what we can then do is analyze his overall performance, but also winners, losers, and break even. And what you do is you just go a little bit to the right. And what you can see here is his planned reward to risk ratio. So that's the reward to risk ratio when he enters the trade. And then here on the average R multiple, this is the exit outcome. So what is his average exit on his trades? So on his winners, he's starting with a 0.29 reward to risk ratio, overall 0.3. And that means by design, this trading system is shooting for a low reward to risk ratio. Very interestingly here, he's starting with a 0.29 and his average winner is 0.18, which then means that he is kind of cutting his winners short, and he seems to have an active trade management approach where he is maybe moving stops around, maybe exiting profitable trades earlier, but in some way managing his trades and interfering manually. This doesn't have to be a bad thing if it's his trading plan, and his trading plan is definitely working because we saw that he is profitable, but we can analyze this deeper, and that's the point of such a review. We can also see that his average R multiple is minus 6.3, which means that he is not letting his winners run to the initial stop loss. If you would let your losses run to your stop loss, this would be a -1. So he's exiting his trades a little bit above halfway towards the stop loss. So that is also interesting. And it seems like the most important thing now is that we know this strategy by design is shooting for a small reward to risk ratio. And we can analyze now if the management for one is optimal, if there are ways to improve it, and maybe take profit and stop loss placement. But one thing I wanted to check further is what are the impacts of such a low reward to risk ratio system on his equity graph? Because I had a suspicion that this is what we'll find. So of course, when you just look at the graph, it's going from the bottom left to the top right. Solid, that's what you want to see. But when we look at how the equity graph is formed, you can see that there are those massive dips. So you have a climb and then you have a massive dip, a climb, a massive dip. And this is what I expected, because a system with that kind of reward to risk ratio profile, you need to have at least 3 winners in a row to make up for a full loss, right? If you lose 1 R on a losing trade, you need at least 3 trades with a 0.3 R to make up for the loss. And so naturally, this is what you expect to see, those big drawdowns. Another thing that I then wanted to see is what does it mean for his winning and losing streaks? Because if you have 2 losses in a row, and let's say they run to your stop loss, that's -2 R. If your average winner is just 0.3R, you need 6.5 winners to get back to break even and 7 winners to end up in a profit. So you need 6 winners in a row to get back to a profitable scenario. So let's go to the drawdown chart. And that is also what we saw. It's mostly just the equity graph in reverse, but what you can see here, top to bottom, it took 7 trades. So from the top to the worst drawdown here, it took him 7 trades. And then from the bottom to the top, 11 trades. So of course, it takes much longer to get out of a drawdown than to get into a drawdown when you have winners that are much, much smaller than your losses. So let's go to your consecutive losses. And this was really astounding. Typically, this also shows your losing streaks below the x-axis, but there are no losses that are 2 losses or 3 losses in a row. So he doesn't have any losing streaks where he have 2 losses or 3 losses in a row. And then I went to the simulator and I scrolled down here. And this losing streak probability chart uses his trading performance. So 73.96 win rate. The average R multiple 0.26 is here. And then I looked because he has 100 trades. And with almost certainty, 99.9%, you at least expect a 2-trade losing streak, a 3-trade losing streak, 82.5%. So it's surprising that he doesn't have at least 2 losses in a row. So what this tells me about his performance is that maybe he has gotten, I wouldn't say lucky, but he has a sample currently that is not representative. And what this means for the trader is that he will hit 3 losses in a row eventually. And 3 losses in a row, if you take full losses, you make minus 3R. And with a 0.26 average R multiple and a 0.3 R multiple on his winners, you need 10 winners in a row to get back to break even, 11 winners in a row to get back into profitable. So the trader will experience this at one point. And I think this is where the challenge comes for such a trading approach. High win rate sounds good. The problem is the low reward to risk ratio, because when it's not an if, when you hit your losing streak and it's only 2 or 3 trades in a row where you lose, getting back to break even with those 6, 7, 10 trades, which again are consecutive winners, can be mentally very, very challenging to deal with. So this is definitely something that the trader needs to be ready for. And looking at the data in this way will help the trader be ready when he experiences it. But we are not at the end, because I wanted to check if there are ways how we can improve this part of his trading, how we can get bigger winners and just improve his overall reward to risk ratio. For that, you could go to the trade management, which is always a good starting point. In this case, the potential performance is slightly above actual, but it's just so insignificant that I wouldn't focus on that. There were times in the past here where the 2 graphs really deviated. So at that point here, his potential performance was really well above the actual performance, which means that he didn't manage his trades optimally and he left money on the table, typically by closing winners too early. The other thing is then here after trade number roughly 60, so for the last 40 trades, his trade management has improved. Maybe he made some changes, but overall, his trade management improved, so that at that point, there's not much room for improvement here. Then the next logical point I checked is his exit analysis, because I had a suspicion that here we will find the answer to whether we can improve reward to risk ratio or not. We don't know at this point. And what I always like to do is use the outcome filters. So I want to look at his winners first. So we only see his winning trades. And what immediately jumped out to me is that when we look at the red bars shows on his winners, how much is the price going against him. This is his stop loss. There are only 1, 2, 3, 4, 5, 6 trades that went past the 50% mark. So only 6 out of his 70 winners is going halfway towards his stop loss, which is incredible. So we open this one, we go to here winner analysis, And what we can see is his average drawdown, this refers to the red bars, is minus 17%. So on average, on his winning trades, the price only moves 17.8% against him. That's an exceptionally low number. It means that the winners work right from the start and that his winners almost never have a significant drawdown. So this means the trader probably does have room and potential to improve his stop loss placement. So I wouldn't say cut the stop loss in half and see what happens, but I would go to the alternative strategies, for example, and then go through your trades one by one. And for every trade, mark what the outcome would have been if your stop loss would have been maybe 75%, maybe even 50%. You can have two outcomes and record them and see what happens. Of course, the win rate will go down. Maybe what's going to happen is that you will go from a 74% win rate to a 65% win rate. But just thinking about if you cut your loss in half, this would double your reward to risk ratio, right? So suddenly you would have a 0.6 reward to risk ratio on your winners instead of a 0.3 reward to risk ratio, which is a significant boost once you see that your winners are twice the size. Of course, you need to observe how this also behaves then with your win rate, if this is still acceptable. And this is a testing process. It's not something that you implement in your trading right away, but it's something that you test and analyze before you implement it. But this tells me, and it's kind of what I expected, that there is room for playing around with different target and stop approaches. I would at the same time not touch the target because you can see there are only a handful of trades that actually reach the take profit. So only 13 trades hit the take profit, which is only 18% of your trades. So the target is already set at a point where you need to interfere manually and you need to close your trades manually. You can see here the white diamond markers is where he exits it. And so he's always most of the time exiting his winners well before the take profit. So take profit placement, there's not much room. He still has to do his manual trade exit approach because otherwise his win rate will drop significantly, which is not then helping, obviously. So the take profit cannot be adjusted the way I see it in this data right now based on the data points that we have, but the stop loss is definitely something that the trader should investigate here. We can, of course, also do a little bit of qualitative analysis. Obviously, we need to understand how well is the trader following his rules, because if you now have, let's say you have 96 or was it 96 trades in this account, and let's assume 40 of them were trades where he broke his rules, then obviously we cannot mix the trades where you broke your rules with the trades you followed your rules. So let's do that. And that's why in Edgewonk we have trade comments. I'm going always straight to the entry because it shows you the entry quality. So he has 16 trades with an impulsive entry and 6 trades with an early entry. And he has 73 trades with a planned entry. So this is a good ratio. Overall, it shows that overall the trader his trades are managed efficiently, or his trades are exited very well. Of course, you don't expect to have no mistakes in a trading approach. What we can see early entries, he is losing money. So what we can do is, for example, go here. We only want to analyze early entries. And what we can see is that, it's a very mixed insight here. So you have 2 winners, you have 2 losses, and then you have 2 break-even trades. What you can also do here is just look at the return. Where is it? I probably have missed it. So it's right here in the front. Yeah, you can see his 1 loss is wiping out all previous wins. So that's the problems, or not the problems, that's just the way such a low reward to risk ratio system plays out. It's something that we can keep in mind for later, because there's still one thing that I really want to analyze and showcase you. Because I went through a lot of trade notes. You can see the trader here, this column with the I. Those are the trade notes. I will not open them because sometimes they reveal just something that is too personal and don't needs to be out here on YouTube. But what I noticed is that there are two themes. One is that he writes that he takes trades outside of his trading hours. He says he trades when he is being outside and distracted. So that's one thing that really stood out, and that's something that you don't see in this data set. But when you look at the trades one by one and see the thought process of the trader, that stood out. So one thing that the trader could do is try to implement a rule where he is not taking any trades when he is outside, maybe even deleting his trading app from his phone, because you can see his holding time is really, really short. Let's switch this to maybe hours. His average holding time on his winners is 1.2. He does have one outlier, which is dragging this average holding time on his losses up a bit. So his average holding time is just hours. It's not days. So typically, this doesn't require you to have your trading platform on the phone. Something that, just by looking at his trade notes, maybe something to think about for this trader. The other thing that really stood out is that he mentioned his trading times, and he said that his worst trading time is 1 p.m. and he is aware of it. And clearly, when you look at here the entry time, this is set to entry here, you can see 1 p.m. is definitely his worst hour. Also 7 a.m. he is losing quite a bit. So I went into the 1 p.m. trades. It's very simple. You just open your journal, you pick 1 a.m. and you can see here it says entry. So those are all his trades. And again, return. He has 1, 2, 3, 4, 5 winners. 1, 2, 3, 4, 5 winners, correct. 1 loss and 2 break-even trades. So 5 winners, 1 loss. Doesn't sound too bad, but you can see. On the loss, he's losing $210 US dollar. And on his wins, he is making 80, 100, 120, 150, maybe 155 US dollar. So he can make up his single loss with 5 good winners. So yes, his 1 p.m. trading time is his worst trading hour, but it doesn't necessarily mean that his trading system isn't working, because it's just one trade that is here dragging down his whole performance. It also seems like this is way outside of his normal risk tolerance, so it's much larger than typically. So definitely something might have gone wrong here with this trade. We can scroll to the right to see maybe his planned entry, emotions during the trade, confident, exit late. So maybe something to do with his risk management. You can see he risked quite a bit. So that's definitely something to consider when you look at just purely the hours of the day. It doesn't tell the whole story, especially for a system that is as skewed as this one. We look at the 7 a.m. period. This was also underperforming, and again, 2 winners making him 93, 94 US dollar, and he's losing 264 with 1 trade. Yes, of course, 7 a.m. is underperforming, but again, it's just one single trade that is wiping out his whole trading performance. It doesn't necessarily mean this hour is an hour that doesn't perform, but there's something else happening here. Maybe taking too much risk, and just clearly one trade that wipes out your whole performance is not meaningful and doesn't and shouldn't lead to the conclusion that you need to stop trading at 1 p.m. or 7 a.m. So those are also quite interesting insights. So overall, I like this approach. It's really different from what we typically see. The big drawdowns, single loss drawdowns, are significant and something to keep in mind when you're going to hit your first 2 or 3 trade losing streak. This is going to completely change how your equity graph looks. It's going to completely demand other things from your mental side of trading. It's going to challenge your trading psychology quite significantly. So be ready for it. Make sure that when you hit this losing streak, you still trade at a high quality. If you feel that you're getting emotional, take a day, take 2 days, maybe take a whole trading week off to just regain focus, separate yourself a little bit from your performance and from your trading, because that is the big danger of such an approach. 3 losses in a row, maybe even 4 losses in a row if something goes bad, and then suddenly you're looking at 12 to 15 trades where you need to dig yourself out of a losing streak, which mathematically can be done with a high win rate, but mentally is then a whole different question.